Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a great day. We're going to talk obviously about this descending channel here. The lower time frames are looking slightly bullish, but we're also want to recognize that the larger time frames here, 4 hour or plus, is going to indicate divergence and that we're going down. So we want to kind of respect both areas there. But this double bottom is playing out pretty nicely. I posted that on social media earlier if you're not familiar. But more importantly, specifically spot volume increasing too. We're going to talk about why that's important and why that's relevant. So these are all important things to kind of recognize. Be sure to stick around. We got a good one today. Let's take a closer look. All right, folks, before we jump into the back end data, friendly reminder, hit the like button, comment below if you get a chance. Deeply appreciate it. We're going to talk about some patterns too as well. I kind of forgot to mention that. I do want to highlight some quick little positivity here for our community. Congrats on our XRP long here from yesterday. Caught that nice little tight long position from 108 to 109. And then, of course, some nice shorts from ETH, Bitcoin, and Solana from some previous past trades. And obviously, again, a BNB short prior to that. So been pretty awesome, consistent there with the majority of the signals. We did have to close out our hype trade early. That's a conversation for another day. That inverse head and shoulders pattern did not play out. But at this point, let's talk about what we're seeing here right now. I mean, this is pretty straightforward. Open interest is dropping, spot volume increasing, and the price sharply jumped up here as the price front run effectively that lower liquidation range. It's a pretty common occurrence nowadays we're seeing where they dangle the carrot for a lot of people that are trying to focus on liquidation alone, and unfortunately those areas never get hit. Right, 61,000 has been like literally hanging out there for a month. It almost feels like so. At this point here, we want to presume that we may be going up for the short term. Lower time frame does show significant impact here where majority of spot volume is increasing, and that's usually a good sign. It's rare for spot volume to increase and for it to be retail, right? Generally speaking, that's usually ETFs and traditional markets. Essentially, when they open, we see that influx and that increase in spot volume. Now, when we take a look here at the 48-hour time frame, this is kind of the weekend liquidation. We do see longs at 62,000 still in pretty good shape. So that was that front run, you could say, where the price pivoted and bounced off that double bottom, kind of effectively held that position, but also more specifically, that liquidation level never got hit, and most people were expecting that, right? A lot of times shorts will hold to those levels, and unfortunately, it just got destroyed probably. At least, depending on obviously your liquidation, event or your amount of leverage, that can change things. But for the most part, it's really unfortunate, but a lot of times liquidation nowadays is not really the only thing you want to focus on. It used to be very reliable. Now it's kind of like semi-reliable in addition to patterns and different playouts. So I think patterns right now are a little more relevant. So we'll talk more about different types of patterns we're seeing, both on lower and higher time frames. But at this point here, pretty straightforward. We look at liquidation. There's still a ton left down below. I'm personally still leaning more towards 61,000 still being a realistic probability for us. I'm going to be much more apt to wanting to take a long at 61,000 than I am right now. Now, obviously, there's a lot of different strategies in play, but for the most part, that's kind of where my mind's at. Now, that's in addition to low leverage liquidation down below, also an indication that we're probably likely to see that. Because people don't necessarily understand this, but a lot of times when you have low leverage, these positions have high volume, right? So for the most part, when you have low leverage accumulated in a specific area, it's really common to see those areas get hit eventually. Now, we may not see it right now or right away, but at some point, 61,000 seems like a very realistic scenario for us, right? And the reason why that's important is because you need to understand market makers cannot buy or sell. They cannot get out of their position or into new ones with the amount of volume that they trade with until those levels are hit, right? Because there's just so much exit liquidity there. So that's usually an area that's highly targeted. I have some limit long orders in the 61K range, just to give you some perspective, even though it may never happen, right? Let's take a look here at some backend data, specifically high block capital, and kind of just see where we're at. Liquidation long delta, or sorry, true retail long, basically just telling us here that we're at a high percentage. When we're upwards in the 100% range, tells us that longs are pretty heavy, which we know that's why they got rinsed here recently. But open interest is also high too, so that does increase the sustainability potential. We have already looked at that, and the fact that we have spot volume increasing with open interest increasing, those are generally good signs, right? When we look at the 7-day time frame here, I'll post this on social media just so you have it. But for the most part, 61.4 to 62.1, just say round number 61,000 range, is definitely an area of liquidation for the last 7 days. It's not just the last 7 days though. We look at last month, and it's the same scenario too, down as low as 60.5K for any potential longs taken within the last 30 days, right? So Those areas are once again targeted for exit liquidity, so I still think there's a decent chance we go there. So I wouldn't, rule out the fact that we haven't bottomed out, or we've bottomed out yet, right? Now at this point here, take a look. Short liquidation delta is high. I just posted this on X and Telegram. It's pretty straightforward, but when this is in the red, you generally don't want to take longs because it tells you the bears are in control. While the price is going up right now, yes, it still doesn't give you like a ton of confidence to take a long position because it shows that we're still in a descending trend. And that descending trend is reflected here for obvious reasons when we have these lower high patterns, right? The price continues to break down. So until this lower high pattern discontinues, you can go with candle bodies here and look, you can see, we need to break 64,000 to have any legs to stand on, right? If we break 64,000, there's a lot of confluence there with moving averages, that point of control here locally. I think there's a lot of positivity to being back up above 64K. So if we can close above 64K today, tomorrow, soon, I think we're in pretty good shape to see that continuation higher. But between now and then, it's best to presume we go lower. A lot of things are pointing down. We can see we're under 50 on the RSI, albeit we're testing that level, but we're still in a position where we're not in great shape. Another pattern to kind of pay attention to here is the head and shoulders, inverse head and shoulders in the macro. This is the daily time frame, just giving us the indication that, hey, our right shoulder should come down as low as roughly 60,000, okay? Just to kind of keep things synonymous. In order for head and shoulders pattern to play out, typically when the price action is moving the way that it is, we will see somewhat of a parallel shoulder. So it should be realistic to presume if we see 60,000, that's that pivot point for us, right? But once again, this dangling carrot for the last, 3 or 4 days, maybe even 5 days, this last week alone, has put us super close to 61,000, and a lot of people keep waiting for that level that may not happen, right? And keep in mind, this could still play out. Generally speaking, the right shoulder is parallel with the left, but for the most part, it makes more sense to presume the price goes a little bit lower. Again, we're seeing a lot of smaller things kind of pointing down, or sorry, a lot of little things adding up to consider the price pool pointing down, while this is still a macro structure. We want to look at the, this is basically the double bottom that I kind of highlighted earlier on social media. This is something that kind of really common, right? We got people waiting for liquidation. It's right down here. And of course, the price gets front run. Everyone's like in a short position, ready to take profit right here, and then the price never goes there, right? Or the inverse, people are waiting for a long right here and it never happens. It's really super common for this to occur. So if you keep getting front run, a recommendation there is to average in. Okay, get a little bit of skin in the game here, right? And maybe a little bit more here and average in here. Average in heavier as you go lower to those key level supports. So between now and then though, no trade is generally the best trade in situations like this. We're in this weird little transition where we need to close above 64,000 to give us some confirmation. We're not there yet. We have a lot of liquidation below 62K. So really the 62 to 64K range is kind of like no man's land in my personal opinion. I don't really like trading these ranges because there's no definitive breakout. There's no definitive direction. While the trend is still down, we've got to respect that. We haven't shifted momentum just yet, while we have a lot of little signs that might kind of tell us that we're shifting gears. So again, those are just kind of things that you have to understand as a trader. It's not always going to be sunshine and rainbows. And when you're going to watch these videos, I'm not always going to tell you what you want to hear. I'm just going to tell you how it is. And sometimes you might hear what you want to hear, but for the most part, try not to be like that. Try to make sure you understand that the market's constantly changing and that you have to change with it, and try not to get too stuck in your ways, and to make sure to always be a little more careful. Nowadays especially. So that's why you'll notice if you're a part of my community, I'm not sending like hundreds of signals a week. We're saying quality over quantity really at this point, and that's what you should focus on too. All right. So if you want that for yourself, consider joining. CryptoCash.tech is the site, link down below. Monthly memberships are available now, so make sure to check that out. Or if it hasn't come up, it will be available soon this week. I've actually put that into motion. So feel free to reach out if you have any questions or concerns. Otherwise, we'll look forward to seeing the next one. Let's take a look at some altcoins next. Quick heads up to our traders. We got a 15% discount on trading fees if you use my link to register through Bitunix. Links down below in the description. All right, folks, take a quick look here at Ethereum. Just kind of see what's going on here. Is it worth taking a long or a short right now? I get that question a lot, specifically over the weekend. So let's go ahead and double check and find out. Now, majority of altcoins you want to be kind of careful with right now, just based on the simple fact that they pulled back pretty hard this weekend with Bitcoin. And as we can see here, pretty synonymous behavior, only a bit on the weaker side here too. So Bitcoin pumped up and is holding its range here so far at this 63.3K range. And we can see 1850 still has having difficulty getting across that 1860 mark. So I think a long right now for ETH is considered to be high risk just based on that metric alone. But let's double check the backend data here and see if there's any kind of indication that we might be in good shape to have, perhaps some backend data telling us otherwise. Now, when we look at liquidation, this hasn't changed too much from the weekend, just intensified. We still got a strong amount of liquidation at about 1820. That's the range I was kind of looking for a consideration on a long. That would require Bitcoin to hit the 61K range, so keep that in mind. But at this point here, based on how weak ETH is versus Bitcoin, I think there's a decent chance we do see 1820 sooner than Bitcoin hits 61K, right? So it really just depends on how you look at it, but short liquidation delta is super high. You really don't want to take a long into this. ETH does not have any of the strong indications that it wants to break bullish. We're maintaining above the 200 SMA. That's all well and good, but that still doesn't tell us too much here. Until we reclaim 1880 to 1900, I would presume that we're going to continue a bit lower. We can see this obvious descending trend here where the price action is still kind of stuck on stupid. So until we break that descending trend at the very least, I would say wait on longs. That's kind of my recommendation there. If you're going to short, be careful taking shorts, but it is inherently less risky right now to short the market based on just the descending trend we're in right now. All right, folks, quick look here at Solana. And as per usual, Solana is kind of working itself into a bit of a range. This is pretty common before it either breaks up or down. I've noticed this very similar pattern here for Solana. But if we look at patterns here specifically side by side with Bitcoin, it's moving the same way. So if Bitcoin goes up, Solana will too. That's really the bottom line. I don't really see anything that's super amazing for Solana. When we look at liquidation delta, it is quite high to the downside, still letting us know that bears are in control. There's liquidation above too, so slight inclination to see the $76 to $78 range for Solana, but it's going to require Bitcoin to push towards 64K, which at this point is becoming a reality. But at this exact moment, Solana is not really the best coin to trade. I would wait for the descending trend to be broken first before considering a long, and obviously making sure that Bitcoin can hold above its 64, 65K range. That's kind of what I'm going to be looking for. But between now and then, just know altcoins are weak here today, and not necessarily the best consideration for a long just yet. Hey traders, quick heads up on an awesome exclusive reward bonus here for my traders through Bitunix. You got a daily reward bonus of $500 USDT, and it's provided in return on investment reward rankings. Better you do, the more you're rewarded. Simple as that. It kind of incentivizes you to be a better trader. Links down below for more information. Be sure to check it out. All right, folks, take a look here at XRP, and it was nice to be able to get that little bit of a breakout here from yesterday. The bull pattern did play out. Obviously, that was because Bitcoin did push a little bit higher, which was expected at the time, but we did squeeze out a little bit of profit there on our XRP long, 20% there from roughly 108 to 109. Congrats to as well for our weekend shorts. ETH, good 60%. Same thing with Bitcoin, and obviously Solana too for some solid profits there, and BNB as well. So for the most part, as you can see, we're slightly heavier on shorts leading into last week. This week it might be a different story. Right now, so far, Bitcoin's holding its range at 63,000 quite nicely. So we're seeing this little bit of a pivot here. Now, when it comes to the double bottom that we saw in Bitcoin, we're seeing similar behavior here for XRP. So obviously, when it comes to a double bottom, you take the progress from however low it went and you increase that from the neckline, we should be able to see 108 on this push, right? Again, that's going to require Bitcoin, of course, to push towards 64,000. That's all subjective at this point. But when we look at the side-by-side, XRP isn't like super performing versus Bitcoin, right? So for the most part, fairly synonymous price action. I don't see anything like super outrageously amazing here for XRP. I don't think we're going to see like a super strong run up. Now, when it comes to the backend data, getting close to break even, but still more shorts than longs. And we're right in the middle of this range here, folks, 104 and 110. Those are the two heavy areas of liquidation. So when we're smack dab in the middle of a liquidation range, usually you want to wait for one of those two outliers to get hit first before taking a trade in the opposite direction. So we hit 110, a short is potentially a possibility for this, right? And same thing with a long at 104. Those are kind of just areas that I like to focus on while we're not there yet. And there's a lot of things that can change between now and then. Those are the outliers I'm really looking for here, right? And that's ultimately what target for the profit targets on our XRP long is 110 to 112. So realistically, I still think that's a possibility for XRP, but it's absolutely going to require Bitcoin to progress higher, right? Bitcoin just gets stuck on stupid and goes down like it has been consistently, lower highs and lower lows. Then XRP will continue to go down as well. So just be mindful of that when you're trading this coin. It's never an exact science, but for right now, the best trade is probably no trade. We're too far in the middle of this range to feel any confidence in taking a long or a short. Those are, again, my thoughts. What are yours? Comment below.